Thank you for watching the SMB Forex and Futures Weekly Trade Review. My name is Mark Principato. In these segments, we review recent trades and highlight particular aspects of the trade that relate to our methodology. In this week's trade, we're going to be looking at the S&P CFD. So for those of you that are U.S. residents, you will not be able to trade the CFD. But non-U.S. residents, of course, have access. People in the U.S. have to trade the futures contract. Now, in this particular trade, we're looking at a pattern that unfolded on Wednesday, May 22nd. This happened to be the top of the recent market. Now, we're going to get into a little bit more detail here. Let me start the video. So you can see here, this trade was not taken from the exact top. There was already some movement or some momentum in between before the trade was initiated. Okay, this thing was initiated around the 1673 area, as you can see here. Now, you can also see the dramatic acceleration that happened since the trade was entered. So what I want to show you here is how we knew to hold on for this amount of time and to help and also to realize this thing's potential. Now you'll notice here is this thing starts to reach these horizontal lines and it says acceleration there. What that means is when certain support levels are reached and penetrated, it actually creates more selling. There's a psychological reason for that, and that is this thing was a very strong market. So people see these horizontal line areas as possible supports, so they buy. But then once their stop gets taken out immediately, as you can see, I'm zoomed in here a little bit, and I want you to notice that when this thing was actually giving us a topping formation, you can see of how this thing was going straight up, followed by the vertical nature of the bearish move, followed by a lower high. The trade was initiated on the break of that support area. Now, that combined with our volume analysis tool, which confirmed that as well, also helps us enter a trade like that around that time. Okay, just as the momentum is really going to follow through. Now, all along, the volume analysis tool, which you could see here on the left, never gave any reason to exit the trade. All right, it was negative the whole time. So there are three things here that you need to consider to manage a trade like this. The first and most important is the actual price pattern, which is called a T4C. The second step is the volume analysis tool, which helped along with the entry, plus the price formation on that smaller time frame helped as well. When all these things are lining up, there's no reason not to take the trade. The third thing here is realizing the potential, or knowing how to hold on to a trade like this. And the potential, again, comes from the roadmap that we get from our T4C pattern. If you know the pattern ahead of time, you know what its potential is. When your volume analysis tool confirms it the whole way and never gives a reversal pattern, there's no reason to exit. So the initial target on this thing, as you can see, is 1645 in that area near the bottom of this chart, marked by the yellow circle. Well, I'm going to show you now a picture of how this thing was realized, how the profit was realized. Here in this picture, you can see there were three exits. The first exit was for 125 pips. The second exit was for 253 pips. And the third exit was for 328 pips. This was exited the next day. So again, when your volume analysis tool basically keeps you in the position, followed by the confidence that comes along with knowing your price pattern, you have a methodology that allows you to really maximize your winners while keeping your losers small. This is how our traders are able to capture reward to risk ratios of 3 to 1 or greater on a consistent basis. So that's the trade review, and I hope you learned something from seeing these trade examples. If you have any questions, you know where to find me. My name is Mark Principato. Thank you for watching the SMB Forex and Futures Weekly Trade Review.